Here we are again with our new episode of Future Digital coming to you from Tallinn, Estonia, the crypto capital of the European Union. In the last episode, we briefly talked about crypto mining and why it might not be the best idea for, well, anyone anymore unless you're willing to invest a ton of money into hardware and you have the patience of an American waiting for a normal healthcare system. This episode will talk about what a bear market is and what in the crypto world is going on in the crypto world. So bear with me. And keep in mind that we're talking about crypto for people who have no idea about crypto. So that's why I keep going over such basic things like what a bear market is. And a bear market is when the market index essentially has fallen at least 20% from its recent all-time high. In other words, it's possible there could be a recession sometime soon. And given all the stuff that's happening, it's no wonder. What stuff? Well, no one still knows the long-term effects of the pandemic, which is technically still going on, and even making a comeback in a lot of places. Then there's that stupid war, major inflation around the world. You get the point. All of this has had a major impact on crypto as well. But fear not. Everything happens in waves. Life always has its ups and downs, and sometimes French cars work. Oh, putain. So the crypto market is currently a bear market. What is specific about crypto that doesn't really apply to the general stock markets around the world? Why is crypto different? Well, we've already gone over what a bear market is, but what's it called when things are going equally well? A bull market. But keep in mind that crypto, by its very nature, is much more volatile or prone to sudden swings than traditional stocks. A bull run in crypto is when tokens can surge in value by 40% or even more in a day. Now you see the constant appeal of investing in crypto. And that appeal is despite crypto's history. You might remember this, but in 2017, Bitcoin went from $20,000 to $3,200 in just a few days, only to bounce back to over $60,000 just a few short years later. That's why I'm saying don't give up hope. Now, as with any stock, when it's falling, it becomes interesting to people who want to buy something for a cheap price, something that they think is going to increase in value again. The trick, the talent of trading on the stock market and crypto, is knowing when it's hit rock bottom. That depends on many factors, of course, most of which are based on people's, or rather other investors' faith in the value of that thing. Remember on our first episode, I said economics is largely based on human emotion? And before you get angry and start yelling at your phone, think about it. It's largely based on human emotion, unlike marriages. So what's going to happen next in crypto? I can say with absolute certainty that it will rebound, barring any sort of government intervention, nuclear war, monkeypox turning into Tyrannosaurus pox. You just have to decide how you feel about it, if you feel that now or tomorrow or sometime in a couple months is the best time to make your move and invest in crypto. Some things you could keep an eye out for, however, if you want to judge for yourself when the right time to invest would be. Crypto in general is pretty young, but there are still some historical trends we could try and learn from. Typically, when crypto is in a bear market, prices go down over a sustained time. There's more supply than demand. When there's bad news, it's really bad, or when there's good news, it's not really that good. Analysts of all types won't really demonstrate trust in crypto during a bear market, and here's where crypto gets interesting. Very little or negative talk about crypto in social media. That's right, social media can actually be a good indicator of what's going on in crypto. There are a number of reasons why, but basically, it's popular. It's cool. It offers an even bigger rush of excitement than traditional stocks. I'd even say it's like a casino. I mean, that's why people go to casinos, not for the lights and sounds, but for the risk of losing. It's exciting. So when these things I just mentioned start changing, like when people start talking enthusiastically about crypto on social media, it might be a good time to start thinking about an investment. Just be careful. And remember, I am not a financial advisor. I'm just some guy learning about this stuff, just like you're learning about it. If you need financial advice, get it from a pro. Next episode, we'll talk more about what to look out for in a bull market in crypto, as well as a few surprise topics. Remember, if you like what you've seen here at Future Digital, don't forget to like our videos, subscribe, and share our videos on social media. Give us some comments too. Future Digital is coming to you from Estonia, as I've already said. This episode's factoid about Estonia is about life expectancy. Historically, Estonians' life expectancy has been fairly low, especially during the Soviet occupation. When Estonia got free again in 1991, the average life expectancy was only 69.5 years, roughly. Today, it's just shy of 80. That's a big increase for only 30 years. What's changed? For one, Estonians can choose how to live now, and they largely choose to be healthy. Lots of exercise, less drinking and smoking, believe it or not. Cycling, running, walking. I myself try to get 10,000 steps a day, and last weekend I reached my goal by walking from the beach to where it was deep enough to actually swim in Estonia's summer capital, Pärnu. That's it for this episode of Future Digital. Thanks for watching, and see you again soon.